All right, if you're thinking about buying a house in 2025, watch this video first. I promise you, you won't regret it. There is a very, very important step that a lot of people miss. Watch this video. The most important thing for you to do before you go out and buy a house, before you even go out and shop for a house, this is the step that people miss. In this video, I'm going to break it down and I'm going to show you exactly what you should be doing as a buyer to get yourself prepared. It's not only going to make the home buying experience more enjoyable, you're going to be less stressed, you're going to be more prepared, you're going to feel better about it, and you've got a lot less likely of a chance of making a mistake. Okay, so I'm not going to leave you in suspense, and you don't have to wait until the end of the video. At the end of the video, I'm going to share some important stuff, but I'm going to give it to you right up front. What you need to do if you're buying a house in 2025, quite honestly, whether it's your first house, it's a move-up house, it's an investment property, you need to know your numbers. The best way to know your numbers is go and get yourself pre-approved and have whatever lender is doing that work to get you pre-approved show you specific numbers to your specific scenario. I'm buying. I'm putting either 3% down or 3.5% down on this purchase. How much is my monthly payment going to be? How much is my total cash to close going to be? What if I buy something at 400 versus 380 versus 420? This is all information that's available to you. You just have to know to ask for it. And you have to know to go and get it, right? What most people do, this is the wrong way to do it. This is the mistake that most people make. They go out, they start looking at homes. 400,000 sounds reasonable. I think I can qualify. And you start doing all this home shopping with no idea what the monthly payment is, no idea what your total cash to close is. And trust me, I know that people do this because I talk to them once they've already identified a property. They're already emotional about this perfect property, the perfect neighborhood, next to the perfect schools, perfect for my kids, all of that stuff, which is great. Do this step first. And I'm going to show you an example of exactly what I show to clients, what I think is helpful, what we've gotten feedback after doing thousands and thousands of these pre-purchase consults is that this is the helpful stuff that helps the buyers be empowered to go out home shopping. They know exactly what they want at the price point that's comfortable for them, not just, because that number is arbitrary and 400,000 sounds good, but that's the number that matches the monthly payment that is comfortable and fits within their budget. So without further ado, this is a purchase scenario that I did for somebody, and I changed around a few numbers for this example. This is an offer to lend, right? This is just an example. 3% down conventional versus 3.5% down FHA. In a lot of cases, it'll be a real clear, this is the winner or this is the winner. In this case, they're pretty darn close as far as what it's going to look like on a monthly basis and a cash to close basis. But I've got them side by side just so the borrower can see it. There's going to be pros and cons to both. There's going to be some properties that say, listen, we can't do FHA financing. It's got to be conventional. There's going to be other circumstances where, these monthly payments might vary by $200 or $300. I'm going to tell somebody you should be going FHA. But get those questions answered today, not 3 weeks into contract, right? And so anyhow, $400,000 purchase. You want to know what your total monthly payment is. That's here, $3,101. And you can see it broken down: principal, interest, taxes, insurance, mortgage insurance. What you'll get online you'll look at a house that's a $400,000 price tag, estimated monthly payment, $2,200. And you're like, sweet, that's awesome. One, it was talking about 30% down. Two, it wasn't including tax and insurance. All these things that you're like, oh, my situation's different. Well, yeah, no, shoot. Your situation's different. Everyone's situation's different. So you want personalized advice and numbers that are for you and your situation. So not only do you get to see the monthly payment, you get to scroll down and say, estimated third-party fees, prepaying taxes and insurance. Somebody should be talking you through that. If you don't understand what that means, have someone talk you through it. Oh, how does that work? Oh, I pay my insurance up front. Yeah, you pay a year's worth, and then you get a little increment of $150 a month going towards next year's insurance payment that will be due in 12 months, right? And how escrow accounts work. What other third-party fees, title fees, transfer taxes, all of that stuff. Know that stuff, not an expert level, but just know it at the surface level so that you understand it. You're going to be much more empowered to go out there and put in offers when you know these numbers. In this situation, these buyers don't have a lot of funds to work with. Their goal is less out-of-pocket funds. So what I did on their scenario was said, here's a $10,000 seller credit. And these scenarios are going to be based on you getting a $10,000 seller credit. Now, here's where step 2 comes in. You need to make sure your agent and your loan broker you're working with are connected. They're communicating. They know the plan. If the agent doesn't know that your whole plan hinges on getting a $10,000 seller credit, well, they might go out and write an offer for $400,000 and you don't have the $10,000 seller credit. And now all of a sudden you're coming with $25,000 cash to close where we've talked about 15. You've planned around 15. Have a plan and then have targets and goals with that plan in mind while working with your agent, your loan officer. Everyone's communicating together. When I have plans like this and I have borrowers that connect me with their agent and the agent and I can discuss things and they say, well, do they qualify? Because this person's not going to do 400 with a $10,000 credit, but if we go 405 with a $10,000 credit, they're game. Okay, yeah, they qualify, no problem. And then the borrower goes in there and goes, what's the difference? Oh, if I go to 405, it's only $39 difference on my payment, but I can get that $10,000 credit where my cash to close is around 15 grand. Cool, that works. And it's that easy for the borrower who has the Excel spreadsheet. Just go into line 11, you can adjust it. What if I offered him 380 on this other house that I really like? 380 with a $10,000 seller credit. Oh, $29.45 a month. Now my cash to close is less than $14,000. Well, I know I'm not going to be in this house for more than 5 years. It's not great, but it's a good starter house. Let's go offer 380 with a $10,000 seller credit. And they know these numbers. Imagine, not only for you, the borrower, but if you're an agent listening to this, a borrower who knows this stuff is really a great borrower to be walking alongside in this home buying journey because they know exactly what it looks like. 2 weeks in, they're not going to wake up and go $2,900 a month. I'm only paying $1,400 a month in rent. I can't do that. That's double. We're going to get those answers answered. No, I'm sorry. Those questions answered now, right? Those people during the pre-approval process. And a lot of times, here's what happens as well. I don't just come out and say you qualified for up to $500,000 purchase. Well, what are you looking for? We're looking for about a $3,000 a month mortgage payment. Okay, cool. Let me show you what conventional and FHA look like. If that's your target payment, you're looking around $400,000 purchase. There's the monthly payment. There's the total cash to close. Does this line up with your budget? Yeah, it does. Can things change? Sure. They find a house that they are in love with. It's going to take $415,000 with $10,000 down. All right, $3,217. Now, John and Jane, who are, John Doe and Jane Doe in this scenario, sit down and they discuss, well, here's what we make. We know we qualify, but that's not the conversation. The conversation is $3,200 a month going to be too much as a mortgage payment? Well, we pay $2,500 a month right now in rent, live a pretty, simple lifestyle, don't have a ton of expenses. We're able to save $2,000 a month. So we know we can do that. It's going to be $700 a month more. So we'd be saving less, but your $450 car payment, that's going to be paid off in 15 months. Oh, you're getting a raise the start of next year. Yeah, we're going to be fine. $3,200 is fine, right? Those are the conversations that buyers should be having. And as I say this out loud and people think to themselves, well, that's common sense. Let me tell you with absolute certainty, and this is what I'm going to close with. The vast majority of people don't do what I just showed you. When I show people this and we walk them through this during a pre-approval, they've talked to 3 other lenders. They've been, quote unquote, home searching for 6 to 9 months. This is the first time this kind of stuff has come across their computer screen. This is the first time these conversations are being had. Now, do we blame it on the loan officer? Do we blame it on the consumer? That doesn't matter. What does matters is if you care enough to be watching a 10-minute video on YouTube, you're in a good place because you're going to do what most people don't. And you're going to make a smarter financial decision because of it. And if all of these exercises ends with, I'm just not ready right now. I've got a great deal with $1,400 a month rent. I'm not ready to pay $3,200 a month. And I'm not willing to live in an area that's going to, translate to a payment I'm comfortable with. Maybe I've just got to sit tight. Okay, fine. But have these conversations, do the math that's required. Really, it's all going to auto-populate in a sheet like I have here. So you don't have to do the math. You just have to plug in the purchase price. You just need to know how much liquid cash you have for a down payment. But this is the number one thing I'm seeing. If you understood the number of times I've heard from an agent, a consumer, a fellow loan officer, we're 3 weeks in, we're 4 weeks in, payment shock. These folks backed out. This stuff happens before you're out shopping for homes, before you're putting in offers. Hopefully this was helpful. If you're not working with a loan officer that's doing this for you currently, if you want to get yourself pre-approved, we're in 48 states. We're more than happy to help, show you the numbers, get you pre-approved, not just to close a deal, but to educate you, right? That's what the pre-approval process should be. And so look for that when you're looking for a mortgage broker. GreatMortgageBroker.com. That's how you connect me and my team. We're more than happy to help. So you fill out the quick form. You tell us where you're at, what you're looking to do on GreatMortgageBroker.com. We'll be in touch. We look forward to hearing from you soon. Talk to you soon. Bye-bye.